Hey everybody, welcome to the Market Board. My name is Dave, and today we're taking a look at Robinhood IPO Early Access stock, Robinhood Markets, which will be stock ticker HOOD. Let me first state that I'm not a financial advisor, so what that means is I don't think that I'm qualified to talk about the IPO process or payment for order flow necessarily. I may not have the full understanding of them, and I may be misinforming people. So what I'll do instead is just focus on the prospectus that has been provided and the content within. There's really no better place to start than the beginning, and with Robinhood, they said since day one, their mission has been to democratize finance for all. Robinhood was founded on the belief that everyone should be welcome to participate in our financial system. The stock market has been widely regarded as one of the greatest wealth creators of the past century, but systemic barriers to investing, like expensive commissions, minimum balance requirements, and complicated jargon-filled paperwork, have dissuaded millions of people from feeling welcome or able to participate. Robinhood is set out to change this using technology to deliver a new way for people to interact with the financial system with a familiar, welcome, and simple design. It's hard to argue the impact culturally that Robinhood has had, as they've pioneered commission-free stock trading with no account minimums, which the rest of the industry has now emulated, and they now continue to build relationships with customers by introducing new products that further expand access to the financial system. Evidence of their popularity is shown by Robinhood reaching the #1 spot in the Apple App Store multiple times in the first quarter of 2021, and frequently was ranked #1 in the finance category of the Apple App Store during 2020. If you've been sleeping under a rock for the past several years and you have not heard of Robinhood and you're not aware of what their business is, let me explain it to you. The Robinhood platform began as a US stock-focused retail brokerage and currently offers the following features: trading in US listed stocks and exchange traded funds known as ETFs, as well as related options in American depository receipts known as ADRs. Cryptocurrency trading through subsidiary Robinhood Crypto LLC known as RHC. Fractional trading, which enables all of their customers, regardless of budget, to build a diversified portfolio and access stocks previously out of reach. They offer recurring investments, which help investors make recurring investment routine and employ dollar cost averaging. Cash management, a program in which Robinhood branded debit cards enable customers to save and spend by paying bills, writing checks, earning interest, withdrawing funds via ATMs, and receiving Federal Deposit Insurance Corporation (FDIC) pass-through insurance on cash swept through their brokerage account. And finally, they offer Robinhood Gold, their monthly paid subscription service, providing customers with premium features such as enhanced instant access to deposits, professional research, NASDAQ Level 2 market data, and upon approval, even access to margin investing. That is quite a juicy market that they will be trying to capture, and their competitors will be any and all retail brokerages, mobile finance app, and frankly, the entire traditional finance infrastructure in the way of trying to get your money into their accounts. So we have to ask ourselves, what exactly makes Robinhood so unique and better than the other offerings? In Robinhood's words, they believe it's due to their creative product design. Their products are designed mobile first to offer attractive investing, spending, and saving experiences as more people shift their daily financial activities to the palm of their hands. The simplicity and ease of use have made Robinhood the go-to mobile investing experience, and this is actually evident in market study. In 2020, Robinhood garnered over half of all new app downloads among mobile investing and trading platforms in the United States. This is from a group that comprised of Robinhood, E-Trade, Fidelity, International Brokers, M1 Finance, Schwab, TD Ameritrade, Thinkorswim, Vanguard, and Webull. Quite the popular guys. Additionally, Robinhood offers category-defining brand. Robinhood today is a symbol of retail investing and finance in America. Robinhood believes this is evident due to over 80% of new funded accounts joining their platform organically or through the Robinhood referral program. By taking a fresh, people-centric approach, the rest of the industry was forced to adopt the same commission-free model beginning back in just October of 2019. Robinhood has financial services at internet scale. During 2020, customers who visited their app on a given day did so nearly 7 times and engaged with us for a variety of reasons: to read the news, to check their watch list, to manage their cash balance, to make investments, and to monitor their portfolios. That figure is approximately 2 to 4 times higher than than other leading fintech companies in the same time period and have sustained this level of engagement at scale with 18 million net cumulative funded accounts as of March 31st, 2021. Robinhood provides a vertically integrated platform that has enabled them to rapidly introduce new products and services such as cryptocurrency trading, dividend reinvestment, fractional shares, recurring investments, and IPO access, while also supporting the ability to quickly scale those products. Additionally, Robinhood is innovative and they have a compelling business model. They believe that they have a strong brand and platform accessibility has created a network that has enabled them to onboard millions of customers with minimal marketing. In the year ended December 31st, 2019, Robinhood's average revenue payback period was approximately 13 months, and for monthly cohorts in the year ended December 31st, 2020, their average revenue payback period was improved to just less than 5 months. That is an incredible improvement in efficiency. Over time, Robinhood says customers are deepening their engagement and relationship within the platform, and that Robinhood's ability to grow with them results in attractive cohort economics, including a nearly threefold increase in average revenue per user in just the first 24 months. A lot of Robinhood's success has been credited to their founder-led, passionate management team led by Vlad and Mr. Bot. But I think it's important that we focus on the other management team members that you probably have never heard of, starting with Chief Operating Officer Gretchen Howard, who was previously a partner at Capital G. Moving on, Jason Warnick, the current Chief Financial Officer, was recently a VP of Finance at Amazon. Their Chief Marketing Communications Officer, Christina Medley, was previously the Vice President of Marketing at Facebook. Chief Product Officer, Aparna Channapragana, previously was Vice President at Google. And finally, Chief Legal Officer, Daniel Gallagher, was literally the SEC Commissioner. Robinhood primarily has made its income in a controversial way, selling your orders to different entities. Let's now take the opportunity to pivot over to some financial information to see how well Robinhood has monetized payment for order flow. Robinhood has 3 primary streams of income, starting with transaction-based, which is their fancy way of saying income derived from payment from order flow. In 2019, the company reported $171 million in revenue, and in 2020, that increased 321% to $720 million. Something worth noting is that when you break this down, you see that over 75% of total revenue comes from this segment alone, and that about a third of the 2020 figure comes from Citadel Securities alone. Moving on to their next segment is their net interest, which is generated via cash management program they have. In 2019, the company reported $71 million in revenue, and in 2020, it increased about 150% to $177 million. The third segment Robinhood generates revenues from is known as other revenues, which is primarily derived from Robinhood Gold. In 2019, the company reported $36 million in revenue, and in 2020, that increased 69%. Hell yeah, to $61 million. By adding all the figures together, you get a total revenue of 2019 coming out to $277 million, and in 2020 it increased 245% to almost $1 billion. The increase is driven by an increase in net cumulative funded accounts, which resulted in higher daily average revenue trades in options, equities, and cryptocurrencies, according to Robinhood, and also the increased interest in personal finance may have attributed. Robinhood recorded a net income of $7 million compared to a net loss of $107 million the year prior. And if you like Wall Street math, they had an adjusted EBITDA of $155 million when compared to just negative $74 million the year prior. In addition, for the 3 months ended March 31st, 2021, as compared to the 3 months ended March 31st, 2020, total revenue grew 309% to $522 million. Recorded net loss was $1.4 billion, but that's mostly due to a $1.5 billion fair value adjustment to convertible notes and warrant liability. Additionally, they had an adjusted EBITDA of $115 million compared to just negative $47 million the year prior. Typically at this point, I like to cover institutional support. However, because this is an IPO, instead I think it's worth mentioning key underwriters in its place, starting with Goldman Sachs, JP Morgan, Barclays, Citigroup, Wells Fargo, Piper Sandler, and even CNBC's favorite, Loop Capital. Let's now use this moment to transition over to some SWOT analysis to briefly examine the strengths, weaknesses, opportunities, and threats that potential investors into Robinhood may face. In the way of strength, Robinhood believes that they have strong brand name recognition, they are a leader revolutionizing fintech, and that they have strong vertical integration all across their application. In the way of weaknesses, in my opinion, their reputation has been harmed. They face a number of lawsuits, and there are numerous issues regarding their UI based on customer feedback. Robinhood has many opportunities, including expanding its current cryptocurrency offerings. They make mention of wanting to build a comprehensive financial services platform, and one of my suspected next targets is, since they already offer a debit card, maybe a credit card or similar solution could be next. Now, they do outline their threats via risk factors in their prospectus, and they include, but are not limited to, having a limited operating history. They may not continue to grow in pace with historical rates, and frankly, legislation against payment for order flow would very likely be very detrimental to Robinhood. So now let's just wrap things up. Let's get to my take and my position. Now, quite clearly, my position is I don't have shares of Robinhood. This is pre-IPO. I will be requesting IPO shares, and let me explain why. I think Robinhood is anything but a safe investment, but I think it has the continued ability to cause disruption in the financial markets. Now, is that a good thing? Who knows? I'm not going to pretend to, but I think it's pretty much impossible to argue the benefit that Robinhood has actually brought to the market since their own inception. Now, I've personally been a user of their product, and I was a beta tester all the way back in 2015, and I have always been comfortable with a payment for order flow agreement. I do hear concerns that people have of the gamification aspect, and it probably just doesn't concern me as much as it should, though I credit that to living in a state where DraftKings is headquartered and casinos are legal here. I think there's pretty significant risk and volatility involved in any IPO, never mind Robinhood going public following meme mania investing. I'm dedicating a very small portion of my portfolio in early access shares if they're available, and if not, I think it's going to be a pretty difficult place to find a comfortable entry point for me. But just as one final reminder, I'm an individual investor. I am not a financial advisor. This should not be considered financial advice. My name is Dave, and this has been The Market Board.